Hello there, I'm Scott Burns, Morningstar's Global Head of Asset Management Solutions. Thanks for watching this video that's part of our Asset Management Quarterly Newsletter. Today I'm joined by John Hale, Morningstar's Director of Sustainability Research. We're going to talk about sustainability. So John, thanks for joining me.
Thanks for having me.
So John, a couple months ago sustainability was all the rage. Has it cooled off at all?
Oh, not at all. I think it's just something that's really a investment trend that we're going to see continuing to build for a number of years to come. I mean, if you look at sustainability, I think in general, it's really beyond just investing. It's really one of the biggest sort of mega trends I think out there in the world today. If you look at things like the Paris Agreement, climate change, those sorts of issues, but also just the role of corporations in a globalized economy, and that's something that's going to be with us for a long time.
You and the research team have been working on a lot of research. One of the things coming out is our Sustainability Atlas. How's that going to help investors when it comes to sustainability?
Yeah, well, our Sustainability Atlas is kind of interesting. It takes a look at our sustainability scores in a geographical perspective, using our 35 Morningstar country indexes. And so what we've done is provide a way for investors to pretty easily kind of assess where in the world do companies deal with the various ESG, environmental, social, corporate governance risks and opportunities, where they're dealing with those better than maybe they are in other places.
We've also kind of answered the call from folks, who are looking for ways to benchmark sustainability out there in the marketplace. So we've launched some indexes.
Yes, we launched some indexes using the same basic evaluation metrics that we are using in our fund sustainability ratings. It does provide a benchmark, and it also provides the basis for potential investments in passive portfolios, which I think is possibly even more important as we're in an investment environment that's moving increasingly towards passive.
Well, at the very least, increasingly focused on costs for sure. So, between the Atlas, the benchmarks, the question that I get all the time, from asset managers and investors is about the performance trade-off. And I know you've got some things you've been working on there, some research. Yeah. How do I, as a fiduciary, invest with my conscience, say, on an ESG standpoint, and deal with that trade-off on performance that everybody seems to just automatically think exists? Yeah.
Well, it is, I think, the single biggest hurdle to this type of investing. I think when you look at the research, and there's been a lot of research out there, published academic peer-reviewed journals over the last 15, 20 years even, and the very clear result of that research has been that, in essence, when it comes to funds and portfolios and indexes that are based on some kind of sustainable, responsible criteria, that there is no performance penalty associated with that type of investing. I mean, this has been looked at from a variety of different perspectives, time frames, different asset classes, risk-adjusted performance, gross of fees, net of fees. Really, the upshot is that there's no significant performance difference going between SRI, ESG, and conventional investments.
I know there's a ton of literature out there. One of the things our viewers can look forward to is a short compendium you're putting together, reviewing all that literature.
Absolutely. I think when you look at what's going on in this area, there is so much interest out there among investors, but for that interest to really be translated into investments, financial intermediaries in particular need to have enough confidence that they can put their investors in these types of investments and certainly not suffer from them, right, if not potentially outperform.
Yeah, I think that's always going to be the winning deal out there in the marketplace, when the advisor can sit down and say, Mr. and Mrs. Smith, I've put you in a financial plan that's built to your needs. I've picked the best securities and managers possible, and it's going to leave the world a better place for your children. I don't know how you compete with that in the marketplace.
What's not to like about that?
Yeah. So, the last thing, I know you've been digging through lots of different things, and we got a very smart audience that watches this. We were kind of discussing, what are some of the other things that you've kind of picked up that we're seeing from sustainable companies?
Well, we think there is likely a pretty strong connection to quality. and in Morningstar parlance to long-term competitive advantage or moats. So that's something we're going to be looking at very closely.
And really trying to see if there's a difference, or is it corollary, is it causal?
Right. Well, to see if there's a connection between the two. We think there's suggestive evidence saying yes. The better a company does on its sort of ESG performance, the more likely it is to be a company with a moat or a competitive advantage. So that's very intriguing. Some of the research out there does already suggest that companies that do well on these kinds of indicators are pretty high quality companies. They have low cost of capital. They have better operational performance on a number of measures, and there's even some evidence that they have some better stock price performance. Then the other thing I would just point out is at the fund level, what we're seeing is that in the U.S. at least, across styles, value, blend, and growth, the funds that hold companies that have these higher ESG ratings tend to be lower risk. So it suggests to me that at the fund level, that companies that do well on ESG tend to be the types of companies that find their way into lower risk portfolios, regardless of style, and really even regardless of whether the fund managers are focusing on ESG per se.
Right. Well, all fascinating stuff. Thank you for sharing with us. I know you're going to continue to dig in on these and other things. And I agree with you. Sustainability is not a fad. I think it's got a lot of sustainability to sustainability.
Absolutely.
So, thank you for watching. You can find a link to the Morningstar Sustainability Atlas below this video on the Asset Management Quarterly. And thanks as always for watching and reading.